All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street for Main Street. If you've not done so already, please give the video a thumbs up, like, comment, subscribe to the channel, come find Jason on Patreon, come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So short week. Obviously did the video last week, really on Monday, so not much is, days have passed here, but we have had some change. I talked on Monday about the candle as we were kind of breaking down from this bull structure here, and I said, we have to defer to the trend until proven otherwise, and we have definitely negated that. So I talked about 5,500 being a level here, obviously that breakup bar from August 15th, and I said as long as that's holding, we're just going to defer to the trend here, and we'll assume that we can still go up and try to make a run at new highs. And based on Friday, after the jobs report, we had bad jobs data all week long. ADP, we had jolts, and of course non-farm payroll on Friday. And markets took a pretty good dive here, although they did try to rally initially on the report. The report was a miss. And I was kind of thinking that it would be priced in a little bit since we had very bad jobs data all week. And a lot of the time when you kind of get that, it gets priced in when there's kind of the, precursors every single day. And we saw that rally right off the initial reports. I said, okay, well, maybe we'll get some, sell the rumor, buy the news type action. But bears came in and rolled this thing right over. There was some talk as well. If we, it depends on how you want to look at things, but, makes a little bit of sense on Monday as to why we may have dumped. I know Hedgeye reported on this. A lot of VIX calls bought. Not just hedges, 271,000 calls, September 18th, VIX 25. So 18th of September would be for next Wednesday. So it's a very short dated option and equals out, about $22 million. Not likely a hedge, it's mostly a bet, most likely a bet. We'll see. The banks get the information first, family offices, big boys get it first, and we all get it late. So that's kind of tinfoil hat moment for the week here. But either way, markets broke down, and we're into September. So that is kind of the case here, and we'll expect now that bears have proven that they have broken a technical level. We'll respect that, and we now look for, at this point, I think we'll probably have to go down and test 53.40 to 53.25. You can see a 618 right there, as well as that previous all-time high. This was the level I kept telling you guys about, 53.25. I said if we break above that, we'll squeeze. We did. So that should get retested, but then the question becomes, can bears, let's just say we do this, can bears come in and make a lower high? I think they can. I think they've done enough damage. We're in that seasonal kind of period. But again, we got to take it one day at a time here. Net liquidity has increased a little bit. It is a little bit of a leading indicator, however, so it doesn't always play out right away, as you can see here on the S&P. It dropped here, but we still went up for a few weeks, and then we had the big drop there. We went up, we came back down, market still went up for a few weeks, and now it's going back up. So, we'll see if that gives us some relief here. Just a couple of things here to chew on, but big thing also on Friday was Waller speaking, and essentially he said, this is Nick Chirmos, again, Fed insider. This is his way of saying, this is the Fed's way of talking to the market without talking. Again, Waller was on TV Friday, and he didn't explicitly say 50 or 25 basis point cut, but it's implied that they will cut by 25, and they may get more aggressive if the labor market deteriorates. Essentially, that's what they're saying. So expect 25 basis points at the Fed meeting in a few weeks, and a open to dovish kind of stance. I want to put this to bed right now. There's a lot of speculation in the financial media, and it's absolute nonsense. And I think that they don't know what they're talking about when they say the market is looking for a 50 basis point cut. They're only saying that because the market is going down, right? Narrative follows price. I promise you. Okay, I promise you, the market does not want a 50 basis point cut. And I can prove that to you right now. So here's all the times that we had a 50 basis point cut. 80s during recession, 87 stock market crash, recession in 90-91, 98 SNL crisis, dot-com bubble, 9/11, GFC, COVID. The only one, really, only two out of all these, really, you could argue, are 98 and 91, where we had any sort of like soft landing type action. The market does not want 50 basis points. That would be a panic. It would show the Fed is panicking, and it could actually induce some serious panic in the market. So 25 is actually more suggestive that the Fed still thinks that we're in a soft landing scenario, which is, you know, a good thing. So I think if we're down into the Fed meeting, we probably get a bid. If we're up, could be a sell the rip. So just a couple of things there. But again, big level. I calculated 53.40 and then 53.25 on the downside. We'll see if that holds this week. Market's a little beaten down here on the intraday time frames. We basically just had a bloodbath for 4 days, and it's very rare to see a short week like that, especially, you know, coming off of Labor Day, finish that red. So I believe that was the worst week of the year. That actually beat out the sell-off with the Iran fears back in April. So market's getting hit here. Triple Q is also getting hit, testing the previous all-time high again. And you can see the triple Qs did hit this essentially close to the 618 on that daily chart. I think that does want to go test lower prices though before a bounce. A lot of people talking about this head and shoulder pattern too. Just be careful when a lot of people see it. They have the tendency to fail. We also have this big trend line right here that is coming back into play. Russell 2000 closed below 210, so not a good sign there, but it's still hanging in there okay. Again, the weekly chart's not broken, and the monthly chart's still fine. By the way, the weekly chart of the SPX, I know that the daily looks weak, but we closed right on the 20 MA. So we're still above, you know, weekly 20 MA for now. Just keep that in mind. Dow here, down 1% on Friday. Slight new high, and then, you know, kind of like a double top situation. But the Dow is holding up better. Again, blue chips, so we're in kind of a risk off type environment. So blue chips are going to do well. What's doing really, really well right now? Insurance, right? Defensives. Look at that chart. In fact, look at this all time. Look at this chart of IAK. Unbelievable. XLU, XLP, XLV, right? They're all at or near 52-week highs. So it makes sense the Dow is leading. SMH continues to hemorrhage. Avgo, Broadcom, reporting earnings Thursday. They reported a really good quarter, but you know, market, you know, that's what happens when expectations are very high. Eventually, you know, it's like, what have you, you know, what more can you wow me with here? So semi's under a lot of pressure. You know, Nvidia probably wants to go down and test that 95 handle. So SMH again has that same kind of look. Big head and shoulder top. But be careful, these are very notoriously trappy patterns. IGV still remains, you know, for me, for technology, this is, if I had to pick, I would like this. If I had to put my money in a tech area. This monthly is still really good. Inside bar, and it's just consolidating. So cloud software remains pretty strong. Transports had a full-on breakdown. So we had the bull inside bar, and then just complete failure, bottom fell out of that. I'm going to say that needs to go test 15.2 and then maybe 15,000 again. So transport's weak. Let's get over to rates. I'll just remove this. We don't need that. All right. So rates on Friday, you could argue that this was a, sorry. Well, actually, let's look at the yield curve here. So 2s and 10s are now uninverted on a weekly close. 3-month 10-year still inverted by 134 basis points. So this is way behind still. 2-year came down, 5s came down, but 10s and 30s, you could argue this is a news failure. So we had a weak jobs report. We made a new low, but we closed back above the pivot low and double bottom. I think bonds are really, really piled in. I don't think you want to be buying bonds here. If you already own them, that's fine, but I can see a squeeze here. Hat tip here to Jason Shapiro. The COTs are now, retail is very, 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 very long bonds. and banks are not. They are short. So just throwing that out there, which side of the trade do you want to be on there? So I could see this very easily becoming a W bottom. If we can get back above 4, I could see us going to 420. So nobody thinks that can happen, but things happen that don't make sense all the time. It comes down to positioning. If everybody's already in, you can get squeezes. So I think the long end of the curve is still good. Food for thought there. Home builders remain strong, up 11 cents on Friday, up in a down tape. But we did lose that breakup bar candle on, Tuesday. Well, we're still holding the support here on the daily. So again, home builders notoriously stubbornly strong. VNQ still very strong on the week, barely down on Friday. I think that wants to go test, 97, maybe even 100. XLF down last 2 days of the week, but again, still closed above the 20 moving average. Very strong here. Berkshire strong. That's a financial. I like that at 450 possibly for a bounce. JPM coming in, but still in a nice uptrend. Goldman coming in, nice uptrend. KRE, again, lost the breakup bar low, so I don't like that. But the weekly is still kind of just chopping around this resistance zone. It's holding up better than you'd expect here in this environment. I don't like that close there on the daily chart. Broker dealers outside moved down on Friday, but again, they're basically still at all-time highs. Very strong uptrend. Oil with a little bit of a breakdown here, down $1 on Friday. It kind of went into my support level. You can see that line drawn in there, going all the way back to like March 2023. So we're testing like 66 or 67. We bounced off of that. I think oil is also kind of crowded short in the near term. I'd like to see a little bit more before trying to trade it, but it definitely broke down below 70. Back above 70, you could squeeze up. Maybe even to, you got like a little bit of a trend line here. You could probably even like go back to there. I don't really love that one as much. So maybe up into this area. But again, people are piled into the recession trade. And it's very, very hard. Again, just to quickly, not to make this too long, but to go back. 3-month 10-year, this is the last one to go. And it's not even close to uninverting, right? So it could take some time before the data really starts to get bad. And again, market can remain irrational longer than you can remain solvent. So just be careful trying to front run the recession. All right, XLE down here into double bottom. Definitely weaker. I don't like that we closed the week below 87. Not very good. XOP still above the 52-week lows, but again, pretty good hit this week. And OIH lost my level. So yeah, and bear flag ended up playing out. I thought it was going to fail, and it continued to the downside. If we reclaim 280 on a weekly close, it could be a failure, and it could squeeze back up. But right now, just give it a downside bias to 260. So weekly 200 MA. I'm watching this on the monthly time frame. So if you're wondering where that white line is coming from, it's that green bar low on the monthly, 282. Now we got plenty of time left in the month. It's only September 7th. So it could spike down and then close back up by the end of the month and still be okay. So I'll be watching that as we get closer. Camco down 3% on Friday. Gave back all the gains from that bounce. I'm not ready to call it dead yet, though. Again, you could have a W here. So I have no bias on these right now. I mean, if you want to buy them for the long term, that's fine. I know a lot of you guys like to do that. NM is a little bit weaker than Cameco, and NJ I do not like. We had a big volume sell on Tuesday, and we closed below that recent pivot. So the juniors are a lot weaker right now, and this should have been major support. It was for a couple of weeks, and it closed below it on heavy volume. So just be careful with the NJ. I'm going to say 15 bucks here is your next bounce area. Nat gas continues to be strong. We closed the week above my little level here, 228. Excuse me, and this should trade up into November. So I think dips can be bought into November. We'll say 240 in the near term, 250 after that. I'm watching, so you have a W right here. And does it do one of these, you know, a WV? That's what we call it. So your W, and then your pullback is the V. And then if you get through 250, I mean, this can go a lot higher because you didn't build any resistance on the way down. You just short sellers, right? So if you break above here, they're going to start getting squeezed. Oh, it's just for fun. Let's just take a fib here. So 50%, 262, 618 at 277. A ways away. Dollar index, also possible news failure, just like the 30 and 10 years. No new low, and we close green on this. So jobs missed, and we close green. So be privy to those things. Yen, again, we'll see if that holds at double bottom. It could happen. But dollar, be watching that closely. Gold, you know, what can you say? Still flagging bull here. I'd like to see it break out soon. I don't want to see it take too long. Otherwise, it, you know, they can fail. But I mean, you know, what's it going to do? Retrace to 2,400? I mean, it's still very strong. Next natural resistance I have is 2610. Silver was a little bit weaker this week. We sold Tuesday, bounced back up, and then back down on Friday. I think this has a little bit more time on the clock before it's ready to break out. But I think in the not too distant future, be a major dip buy on it. Same thing with platinum, which is just kind of chopping this week, basically a flat week. And the palladium, which was down a little bit on Friday. Copper outside moved down Tuesday. Starting to put in an immature bear flag. Again, we talked about this. I said, you know, I liked this level. It got long. We had a runner position. It got stopped out. We made money on all legs of that trade. And I said, you know, if it doesn't start getting up into this area here soon, it might do one of these rollovers. And it looks like it's doing that. But again, just be careful. A lot of traders want to short oil. A lot of traders want to short commodities. And that's the irony, right? So we're going into recession. The data gets worse and worse. But if too many people are piled in short on certain things, they can squeeze very hard. And then that confuses people. But that's the long and short of it. So I have no play on copper right now, but it is a little bit weaker. And lastly, Bitcoin, I just find this sentiment right now hilarious. So 23, so we're into extreme fear, and I can't figure for the life of me why. So I come on here every week and I tell you guys, this is a, to me, I think, am I the only one that sees this as a big bull flag here? So, you know, it is coming down. We did lose that breakup bar low. Bear flag played out. Now we're coming into this big wick candle. It might even fill it. But again, you're still inside of this channel here. So I think Bitcoin's getting ready in the next, you know, couple weeks to months. That's invalidated, I think, if we, you know, we lose 50 on a weekly close. I mean, there will be a lot of support down at like 44, 45, and then a lot at 40. I mean, that would be a big failure if that happened. So I'm not saying it can't happen, but I got to just default to the bull pattern here on the larger time frames. I think Bitcoin's fine. I also think Solana's fine too. Big base right there. And again, it's 20 MA. When it catches up to price, that's what tells you it has done enough consolidation, right? So that's going to start inching up. And if this just stays like sideways, you know, sideways to up, sideways to down, it can get ready to go. So, all right. Anyway, markets again this week, pretty much in free fall. Definitely felt a little coordinated though. The VIX didn't really explode. It was definitely pretty orderly selling. That could happen. You know, we could see a little bit of disorderly selling Monday, maybe another margin call Monday. Then I think you start to bounce, and then the question becomes, do we make that lower high here? I think that obviously the odds are much higher. I think if we were going to make all-time highs, we wouldn't have lost that breakup bar low. Bulls wouldn't have given up this ground. They did try to defend it on Thursday, and they just didn't do it on Friday. So too many longs up here. And, you know, they're obviously trapped. So we'll see what we get next week. Again, be cautious. It is, we have CPI Wednesday. The market doesn't care as much about inflation right now. But, you know, it could be a market mover. The market cares more about labor. than anything. And then obviously we have the Fed and OPEX coming up after that. So that will be the big one there. So anyways, guys, going to wrap it up here. Again, don't forget to come find Jason on Patreon. Come find me on carnivaltrades.com. I'll see you guys all next week.